And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. I have Sean next to me today. Sean, say hello to everybody.
Good morning.
So, Sean, quite a bit has happened since
I'm
our
excited.
last...
It's almost time, guys. It's almost time. Maybe a week or so more.
A week, ooh.
We've waited so long. I stayed away from Bitcoin for so long. I was disciplined for so long. And now, I'm getting mentally ready, guys.
So let's talk about what's happened so far since our last video. We had Binance and Coinbase, which both got sued by the SEC, which then led to this dump to the downside. This was on June 5th. Sean, okay, it led to a swift dump to the downside. But what happened right after? Look at this candle. This was like this is a bullish engulfing candle.
That's a bullish engulfing candle.
All right.
And this is what matters is the context under which it showed itself, right? Bearish news being ignored and responded with a bullish engulfing candle. That's usually an indication of a confirmation of a bottom formation. Guys, bull tops are put in when bullish news is ignored and price breaks levels. Bear bottoms are put in when you see bearish news being ignored and you see price drift to the upside or pump to the upside. And hey, like, we just got two big announcements from the SEC and price pretty much just ignored it. In fact, bullish engulfing candle right there. Now, I don't want you guys to get caught up in the daily candles because we don't have a midterm confirmation just yet. We're going to be talking about that today. But at the same time, mentally get ready, because either way, around this zone, around this time, remember I've been saying around the second week of June, guys, that's around when I'm expecting price to start getting interesting again.
Yeah. And also, guys, if you have to rewind that and just sort of note down what Sean said about basically how to interpret news on pivotal points of the market, that's going to be very important even on the tops. It's going to be very important on the top. So take note of those little psychological nuggets. So as far as Bitcoin is concerned, Sean, we're still very much in this falling wedge right now, right? But it's not just that. What is the backdrop? Bitcoin drawing out a falling wedge, still very much in the parameters of it. Weekly, okay, you can see the falling wedge on the weekly. Let's put on our Mango ribbon. By the way, guys, Mango ribbon is completely free. All you got to do is just request access, okay? You'll find the link in the description below. I'm going to knock off everything I don't need, okay, just to avoid that clutter. Let's get rid of the 55. Let's get rid of the 21.2. Okay, let's just keep the 10, the 200 simple moving average, and the 200 exponential moving average. And you can see that we still have yet to get a confirmed close underneath that 200 simple moving average. In fact, price came, what is the bottom of that channel? Sean, lines up with the 200 exponential moving average. It's an entire freaking cluster of support in that region right now, right?
Like, betting against this is just so difficult, right? If you're a short trader and you're betting against this, kudos to you. Like, very brave. I think the easier trade to the downside has always been underneath that entire juncture of EMAs and SMAs, particularly the 200 MA and the 200 exponential right over there. We also have an FVG coming in that zone, so there's a lot of support there. And falling channel onto support, high time frame support is usually something you don't want to bet against.
Yeah. So so if you had to really sway one way, Sean, where do you think this pattern really, breaks to?
It depends on how long and how deep into the pattern we go into, because remember, my favorite trades are when we break a pattern like this to the downside, put in a bullish consolidation underneath it, and then break back into the pattern, right? How this has been our favorite trade over here at Mango. Zoom out, Krisha. And now you guys can see it. This was our big trade from the bottom that essentially set us up for this big move from around 17K to 30,000, right? You can see that break of the falling channel to the downside, and ascending triangle being put in underneath it, breaking back into the falling channel and just breaking out of it, right? Now, we talked about this throughout November and December. We were preparing for this trade. Now, similarly, guys, we got to mentally prepare for the next trade, a very, very similar cascading pattern trade that is being put in place at the moment. Because if we put in something like this, I think the measured move off that channel, Krisha, is pointing to around 32,000. And if we break 32,000, my final target of around 42,000 is going to be on the table.
Yeah. Okay, so let's talk to them about the cascading play. So I found a cascading play. Sean, I'm looking at this right now. This is my current lens. Okay. In fact, I bought Bitcoin spot yesterday, guys. I bought it based on a 4-hour FVG. I bought spot also because we're currently on that weekly 200 simple moving average. But what is the play here? Well, price currently on macro support. If I take you guys on over to the lower time frames, I know just how much you guys dig the lower time frames, but here is the trade that I personally am gunning for. Okay, I caught price on support, good stuff. On the 1-hour time frame, guys, your lowest freaking time frame, at least for me. I know some of you guys like trading the minute charts, but check this out. We're putting in a falling channel, okay? If we start breaking the midpoint of 26.5K, the midpoint of this FVG right here, okay? So I want you guys to focus on the levels. If price starts living over 26.5K, we break this bullish pattern to the upside, okay? The measured move to which will take us back to the highs right here, okay, which is around 27.2K. But if price starts getting up to 27.2K, what does that really line up with, Sean? Well, we get very, very close now to the top of that pattern, the bigger daily falling wedge pattern, guys.
So we have a pattern within the falling channel. We have a falling channel within the falling channel, right?
Yeah.
I love this pattern within patterns, and potentially even a fake out to the downside over here. So let's see how this plays out. If Krisha's falling wedge within the wedge plays out, then we may actually break this wedge out earlier. I'm kind of expecting this wedge to break out maybe perhaps next week. Or perhaps break down, because remember, guys, we have an FOMC meeting coming up too, right? If the markets are surprised over there, if the Fed comes in hawkish while the market is expecting the Fed to come in with a pause, at least a temporary pause, if the Fed surprises over there, even with a hawkish posturing with their Fed speak, we may see the market get spooked out with a temporary dump, just like this Binance and Coinbase FUD had a temporary dump that was picked up immediately. If we see a temporary dump that gets picked up immediately, that could line up with this falling channel breaking towards the downside, consolidating a bit, and then breaking back into the falling channel. That's when you have a lot of trap traders on the wrong side of the trade, causing price to just boom up to the upside, right?
All right, so what's the trade here? What's the trade that we're looking at? Well, for Bitcoin, guys, I'm keeping this very simple. We're currently putting a falling channel into macro support, particularly the 200 simple moving average, which is the red line on my chart, and the 200 exponential moving average. Now, if I'm looking at these two moving average in relation to that formation, guys, I would be gunning for the 200 exponential average as the bid. Okay, that would be the bid zone because it's going to be so easy to manage. There's so much confluence in that zone right now. Even if I just mark this out with one sort of horizontal line right here, right? This was that entire breakout zone too. So we have the 200 exponential moving average sitting here. We have the breakout zone of this beautiful, beautiful consolidation that we were putting in back at 18K, right? This is the breakout. So we're essentially testing that breakout once again. Now, where is that really coming in at? The 200 exponential moving average is coming in at 25.3K. Okay, in my opinion, that is going to be the easiest bid to manage. It's going to be super, super easy to manage because if price breaks down from there, you know that you are wrong on that trade. All right, that is the invalidation. It's the bid and your invalidation. When you can wrap it up together, that is the sweetness of the entire trade. Now, as far as upside targets concerned, I'll be looking for this pattern to break to the upside, which would then take us to around 30K, going all the way up to $32,000. Okay, this is going to be the entire range. All right, of course, there's going to be certain conditions. If the pattern breaks to the upside, only then will I be expecting the move to $32,000. First stop, as far as shallow targets concerned, I'll be looking at top of the entire pattern, which comes in at around 27.6K. Right.
So you could build your trade into the first target as well, right?
Yeah.
We could essentially get your initial position, gun for the initial position around the 200 exponential moving average, probably underneath if those lows are going to get swept, and then look to get your confirmation position or the second part of your position, right over there, hunt for that higher low, and then look for continuation. So if you're dividing a position into half, you just go for two, entry one, entry two, or you could divide into three targets. Like for example, we sweep the lows, that's your first target. We close above the 200 moving average, the red line right over there, that's your second entry. And then your third entry would be the higher low outside of the wedge that Krisha has marked out there for us, right? So that's how you can build your trade as well, guys.
Yeah. So yeah, keep this simple, stupid. Right now, still on support, guys. Still on support. Any downside targets that you have, Sean, if we break the 200 exponential?
Oh yeah, so if we do break that 200 moving average or the 200 exponential moving average, I'll be looking towards the monthly 10 SMA. You could even look at the 3-month 21 EMA, guys. That's coming at around 23,000, 22,500ish. That entire zone. That's going to be an interesting level. That's essentially a very, very, very key level that Bitcoin needs to hold. So because it's the key level that Bitcoin needs to hold, it becomes a very easy trade to manage. Because hey, if it doesn't hold it, just get out of your trade, period. Right? So that's why I'm going to be getting aggressive on my trade. In the meantime, around the bottom of the wedge, the 200 exponential moving average area that you mark, Risha, that's why I'm nibbling into my trade myself, right? But I'm not as aggressive as I would be if we do come down deeper, right? The deeper price gets down towards that monthly 10 SMA, the more interested I get.
Yes, sirree. So yeah, you guys have our thoughts on Bitcoin. If you guys enjoyed this analysis, make sure to smash that like button, and we will see you in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.
Ciao.